Hi, I'm Rudy Martin, filling in for Klaus Vogt this week on Money and Markets TV. As President Obama noted 2 weeks ago, Brazil has transformed into a thriving and affluent country. It's now the 7th largest economy in the world, the 5th largest if you just consider the G20, and 30 million Brazilians have been lifted into the middle class over the past decade. It's the world's largest exporter of ethanol and orange juice, a major exporter of beef and poultry, and it has one of the strongest currencies in the world. The Brazilian real gained 3.4% against the US dollar last week as money flooded into the country. Year to date, the real has appreciated against the Japanese yen, Chinese yuan, and the euro in addition to the dollar. The strengthening real does reduce some of Brazil's export pricing advantage, but the domestic economy there is still growing, especially in 3 sectors I'd like to talk about. First is wireless communication. At first glance, it seems that Brazil's wireless market is close to saturation. After all, it has more than 207 million mobile subscribers and a penetration level of over 106%. And Brazil added 10.5 million 3G subscribers just over the last 12 months. But the foreign-owned companies that dominate the Brazilian telecom market still see immense potential because despite the recent growth, only 10.6% of Brazilians have that 3G mobile service. As is obvious from AT&T's recent $39 billion acquisition of T-Mobile USA and Vodafone's $5 billion joint venture with India's SR Group, the major global telecom players are looking for growth, and they're already turning their attention to emerging markets, and I believe that companies with an established presence in Brazil will make attractive acquisition candidates. In my opinion, the best name in the business is Telefónica. The Spanish firm owns 50% of Vivo, which gives it a 30% share of the Brazilian wireless market. And Telefónica plans to invest nearly $15 billion in Brazil over the next 4 years. If you're looking for a domestic operator, though, check out Brasil Telecom, which is traded on the New York Stock Exchange under the ticker symbol BTM. Brazil's second big growth industry is infrastructure. The country will host the World Cup in 2014 and the Summer Olympics in 2016, which will bring a load of new economic opportunities. But in the meantime, Brazil will require upgrades in roads, bridges, hotels, public transportation, and airports to handle the visitors and additional traffic. I like the EGShares Brazil Infrastructure Fund. Unlike many other emerging market ETFs, it doesn't focus exclusively on mega-cap stocks. About half of its assets go to mid-cap securities, and utilities represent its largest holdings, with industrials and basic materials coming in second and third in terms of the weightings of the holdings. Finally, I'm seeing a lot of growth potential in consumer goods. Just look at the auto sales. In March, Brazil's auto sales shot up 12% over February's numbers. Ultimately, that may also be a good indicator for funds like the Global X Brazil Consumer ETF. It includes 2 of my favorite stocks, Brazil Foods and AmBev. Now, if you're considering investing in Brazil, there are a couple things you should be aware of. Inflation there is running well above the government's target range, but the central bank is raising interest rates to keep up. Brazil's benchmark rate is now 11.75%, but high interest rates don't have the same impact on Brazilians as they do in developed markets because mortgage lending accounts for only about 1/10 of total credit, and there's no such thing as a collateralized debt obligation. Overall, Brazil's GDP expanded by 7.5% last year. That's the strongest performance since the 1980s. While economic growth won't be so fast this year, Brazil is still one of the world's most dynamic emerging markets and represents a solid investment opportunity. I'm Rudy Martin, in for Klaus Vogt. Thanks for watching Money and Markets TV.